Welcome back. Now, the findings of the third quarter Afrimat Construction Index reports an impressive double-digit quarter-on-quarter increase, this representing a significant improvement over the second quarter. Independent analyst Roelof Botha, who compiles the index, joins us now with greater assessment on the print. Roelof, thanks so much for your time today. So we are seeing growth on a quarter-on-quarter basis, but when looking at the print on an annual basis, we are still seeing a bit of a lag. Just walk us through those numbers.
Yes, certainly. It was, as you've indicated, it was a stunning quarter-on-quarter performance, 10% increase. We are watching the listed companies operating in this environment sort of straddle between mining and construction very carefully. Also the Optimum investment group, and Afrimat itself is a shining example of the merits and benefits of diversification to the extent that you can do that. But it's especially the building materials that have been produced in volume terms that have also increased year on year by more than 5%. And it's especially interesting to note that Afrimat is actually reopening quarries that had been closed for quite a while. That is exceptionally good news. It shows that employment creation is taking place in construction, but unfortunately at a very slow pace.
And I was about to mention that the issue around unemployment, which yes remains a problem, but we are seeing a positive trend playing out in the ACI for Q3, which is encouraging, right? You do say it's moving slow, but encouraging nonetheless.
Yes. What is also, this hasn't happened in a while, this is very comforting, is that 9 of the 10 indicators that are included in this composite Afrimat index, 9 out of 10 quarter-on-quarter turned positive. The big concern remains construction works. The value of construction works in South Africa is still negative year-on-year and quarter-on-quarter. That is really a great pity, because
what are we seeing there? Are tenders just, sorry to interrupt you there. What are we seeing? Are tenders just not being approved?
Yes, at a recent, there was a roundtable discussion of some engineering firms in Johannesburg this week, and it's the same old story. A lot of talk, a lot of money available, but then, then there's another meeting. It needs to be transformed into action, and the only way to do that is to involve the private sector at the very beginning of the project pipeline, and that is at the tender identification stage, and to take that partnership through, because the private sector is in a much better position with regard to technical skills to adjudicate on tenders, and also to assist government in determining priorities over where are the roads the worst in the northern provinces, how to prioritize that, and how to do that, broadening or just fixing. In some cases, it's better to just, scrape the road and make it a dirt road, because right now some of these potholes are life-threateningly dangerous.
Yeah. I just want to circle back to the GDP print that we got out yesterday, and some encouraging figures from there, where we saw an uptick in fixed capital formation in the third quarter. Of course, while it is tepid, I was wondering if that's being reflected on the ground in terms of spending and in terms of projects and developments. You did highlight there that it does still seem to be turning around quite slowly.
Yes, I have a reputation for being a sunshine economist, but facts speak louder than emotions. And yes, the GDP figures were amazing, 2.1% year-on-year real growth. Unfortunately, as far as capital formation is concerned by the public sector, it's still down almost 10% in real terms from mid-2023, when the high interest rates started biting. I've spoken to many economists, and there seems to be a large measure of consensus that if we can just get the prime rate to drop to, let's say, around 8.59%. I just want to remind the viewers that it was 7% in 2021.
Yeah.
If we can just get that horrible prime rate to drop to between 8 and 9%, I'm convinced that construction activity will start taking off at a rapid pace.
I mean, on the brighter side, while rates do remain high, there's been a shift when it comes to bond applications, and I guess that's encouraging from a consumer perspective.
Yes, well spotted. One of the most striking inverse correlations that one can find is if you plot the Better Bond Index of home loan applications for mortgage loans on the same chart with different vertical axis as the prime rate. And there is such a direct inverse correlation. As the prime rate went up, the home loan applications just dropped. And now that the prime rate has started going down, the home loan applications are starting to go up. But we need more of that.
Yeah.
We need to, put some VUMA into that correlation.
All right, let's leave it there. Roelof, thanks so much for your time and just unpacking the ACI for the third quarter for us. Now, that was Roelof Botha, independent analyst.